Wages are on the rise, but the cost of living continues to bite. Blood plasma group CSL reports a jump in sales thanks to the rampant flu around the globe. And the University of Melbourne and a Dallas biotech company reckon they can revive the Tasmanian Tiger. It's Thursday, the 18th of August, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Did you ever think we would get Tasmanian Tiger in Fear and Greed?
No. And look, it's got a touch of the Jurassic Park about it, don't you think? And
it's a cracking story.
Oh, yeah, but aren't you a little bit worried? I mean, they've made kind of 5 or 6 movies now warning about the carnage that comes if you try and bring back extinct species. I'm going to take that as a bit of a warning.
You sound like one of my kids talking about alien invasions and Roswell and things like that. Yeah. Just a little bit.
And this is the point at which Fear and Greed becomes a conspiracy theorist podcast. It's a slippery slope, isn't it?
Fear and fear.
Yeah. Forget the greed. It's just fear and fear now. Anyway, look, you've got an interesting chat coming up a little bit later on with one of our favourite kind of semi-regular guests, Chris Breike, the CEO of online investment advisor StockSpot.
Yes, and we talk about superannuation funds. It's not just a straight-out investment chat. This is about how you think about super and what sort of assets that they invest in that you can't invest in personally. And we talk a bit about fees and how much of a difference they make. It's a great chat with Chris.
Yeah, it's coming up a little bit later on. But the main story this morning, Sean, the federal government, the Reserve Bank, market economists, investors, it seems like everyone has been waiting for a big jump in wages, but it hasn't arrived yet.
Yes. The June quarter wage price index shows a rise of 0.7%, slightly lower than expected, and wages growth for the year came in at 2.6%, according to the Bureau of Statistics. It's the highest annual wages growth rate in almost 8 years, and there's now been 3 consistent quarters of increases. But given the tight labour market, unemployment is at 3.5%, it's hard to imagine wages growth remaining that low. In fact, you can already see, if you look at the private sector wage growth, including bonuses, payouts grew by 3.3% throughout the year. Now, wage growth matters because it feeds into price rises. Big wage hikes, which we haven't seen yet, add fuel to inflation. But with close to 1 vacancy for every unemployed person and unemployment likely to fall lower today, wages will almost certainly rise faster than that 2.6%. Michael, this is a good thing though. Inflation is much higher than wage rises. Therefore, in cost of living terms, people at the moment are going backwards. You don't want that to keep happening. In fact, what you do want is inflation to come down and wages to go up and kind of meet in the middle sort of thing. You certainly don't want really high wage inflation, but it's something that the Reserve Bank is watching very, very closely as it works out whether or not to lift interest rates.
And I imagine it's a fairly safe bet that wages are going to be a hot topic at next month's Jobs and Skills Summit.
Yes, it will. Now, Federal Treasurer Jim Chalmers yesterday set out the ground rules for that summit. It will be about the challenges of labour and skills shortages, fixing a broken industrial relations system, lifting productivity and harnessing opportunities presented by the shift to cleaner energy. That sounds like the Greens' influence there, Michael. Now, Dr Chalmers released an issues paper yesterday in an effort to focus the 2-day meeting on the labour market and not make it a talk fest about other things like tax reform.
All right. How about local markets? What happened yesterday?
The S&P ASX 200 closed the day up 0.3% to 7,128 points. The banks were mixed, with Commonwealth Bank down nearly 2% and the other 3 majors higher. BHP and Rio were up while Fortescue was down. The retailers did pretty well yesterday, Michael. Wesfarmers finished 2.2% higher. Woolworths and Coles were both up around 2%. Goodman Group, the industrial property outfit, finished 2.5% higher. Now, the best on the day was Challenger. It was up 5.6% following its big tumble on Tuesday, and Brambles did well. A little more on that shortly. Gaming Group PointsBet was the worst, down 7.7%.
And what about international markets?
There's still plenty of pressure on oil prices. Brent crude is down to $93 a barrel. Okay, maybe it's not the biggest story of the day, but anything that pushes petrol prices lower is a good thing and worth mentioning. You'd agree?
Yes, I certainly would agree with that, Sean.
Michael, there's a bit going on in currency markets as well. The Aussie dollar is trading above 70 US cents. The yen is remarkably strong at the moment, and the New Zealand dollar is finding some friends after the Reserve Bank of New Zealand yesterday lifted its official cash rate by yet another 50 basis points.
Sean, I love how this podcast is all about me asking you quite kind of detailed questions, all about business and economics and everything. And the only time you ever ask me a question is, do I think petrol prices going down is a good thing? So it feels like there's a little bit of an imbalance there, but I'm okay with that imbalance. Anyway, we will be back in a moment with the rest of the day's business news. Sean, former Prime Minister Scott Morrison yesterday provided probably what I'd describe as a spirited defence of his decision to be a co-minister in 5 portfolios, explaining that he didn't tell the relevant ministers in most cases because he was worried it would impact how they actually did their job.
Yes, he also said he acted lawfully and he won't quit politics, as has been suggested by many, including some in his own party. Now, current Prime Minister Anthony Albanese said his predecessor had trashed our democratic system. Mr Albanese will receive considered legal advice from the Solicitor General on what Mr Morrison did early next week. In case you haven't been listening to the radio or social media or watching TV over the past few days, Scott Morrison, during the pandemic, made himself co-minister for health, for finance, for home affairs, for resources, for treasury. And in all cases but one, he didn't tell the incumbent minister. The fallout has been quite remarkable, from elder statesmen like John Howard basically saying it wasn't advisable, through to Karen Andrews, who was a front bencher with Mr Morrison, saying he should quit politics. Obviously, the other side of politics are being very critical as well. Most are staying away from criticising the Governor-General, David Hurley, too much, but they're certainly piling on Scott Morrison.
Yeah, it's a big story. Blood plasma giant CSL share price fell 1.3% yesterday after announcing a 5% drop in pre-tax profit last financial year.
I love this company. You know, it's all about collecting blood and they make so much money from it. However, the fall was actually driven by lower plasma donations that culled sales of its core blood products. But overall, revenue was up to $16.6 billion US, and that's because of the flu vaccine. It's been a really bad flu season globally, and that's good news for CSL. Its seasonal influenza vaccine sales jumped 16%. Chief Executive Paul Perreault called it a resilient performance, given the challenges of COVID-19. The good news for the company and for shareholders is that second half plasma donations have improved materially, though at a cost, because CSL has to provide bigger incentives in the US to encourage people to give blood. Do you have any idea how much you can get for going and giving blood in the US, Michael?
No, I've heard it kind of referred to on TV and in movies and things, because obviously we don't have those same incentives in Australia. How much is it?
Well, it's normally about 50, somewhere between 50 and 75 US dollars. But if you're a first time donor, you can actually earn hundreds and hundreds of dollars, in fact, up to $1,000, according to reports, because what they want is to get you in. And so, you know, you earn that first $1,000 and then every other visit you might earn $60 and people make money out of it.
Wow. I had no idea how much that was. That's actually quite a big sum.
Sure is. A lot of money.
Yeah, it certainly is. The boss of listed property group Domain believes the property FOMO of the last few years has come to an end.
And as a result, people in the market are more willing to wait and see rather than rush to purchase. The comments from Domain Chief Executive Jason Pellegrino came after the group announced a 21% jump in revenue, but just a 2% rise in net profit. Mr. Pellegrino said that the balance between supply and demand in real estate was now being restored after years of excess buyers driving up prices. He forecast that prices will continue to decline, but he's nowhere near as pessimistic as some market watchers. He thinks prices will stay above where they were before the pandemic. And of course, Mr. Pellegrino does this for a living. Domain's share price yesterday ended more than 4% lower.
Oil and gas giant Santos has announced a tripling of its first half net profit thanks to sky-high prices.
As a result, Santos increased its dividend to shareholders and upped the size of its buyback, which should feed through to higher earnings per share. Its share price, though, dropped 2.4% yesterday. Also, the company said it's going ahead with the construction of a $2.6 billion oil project in Alaska, notwithstanding growing pressure to refrain from developing new fossil fuel resources. Santos owns about half of that asset. It expects to start producing oil by 2026, and it claims it will be net zero thanks to a carbon offset project with the Alaska Native Corporation. Tricky business trying to sell that one.
Yeah, certainly is. An interesting one coming out of New South Wales, Sean. Premier Dominic Perrottet has outlined a suite of changes, including a buyback scheme for some disaster-ravaged areas following an inquiry into the state's flood disasters.
That's right. Recommendations also include a permanent state emergency operations centre, a new cabinet committee that can be used to respond to major natural disasters, and Resilience New South Wales will become Recovery New South Wales and will focus on the first 100 days after a disaster to coordinate the cleanup. Let's hope these actions are taken so that in the future, the states along the East Coast will actually have a better response to the natural disasters that seem to be more frequent.
Yeah, and just while we're on floods, Sean, the East Coast is set now for another La Nina summer, which is the third in a row.
Yeah, there's a 70% chance of a wet summer down the East Coast. That means potentially more floods. And one thing that I did hear yesterday, because there's so much moisture in the ground already, we don't need as much rain to create floods as we did last time, let alone the time before.
Sean, obviously it's reporting season at the moment, and another large listed company to report yesterday was Brambles, the transport and logistics giant. It has been under cost pressures, but it's managed to pass the higher costs on to customers, and that helped its share price jump 5% yesterday.
I love this company. I don't know why. I just think pallets are pretty cool. Brambles has 340 million pallets, crates and containers.
There's a good marketing campaign for them. Pallets are pretty cool.
Pallets are pretty cool. Well, 340 million across 60 countries. I think that's great.
That is big.
And they're also a really good economic indicator. So if there's a recession or a slowdown, demand for pallets falls. It's pretty simple. Now, that actually hasn't happened yet. That's what Chief Executive Graham Chipchase came out and said yesterday. Brambles has been able to pass on higher timber and freight costs. Mr. Chipchase was quite funny about it. He said he doesn't expect too many Christmas cards from customers for upping prices. But the fact that they could pass on those higher prices is interesting because obviously retailers and the big users of pallets are prepared to pay for it.
And let's just run through a few of the other results quickly. Sean, corporate travel management will pay a dividend for the first time since the pandemic. Good news, thanks to a doubling of revenue last financial year.
That's right. It made a profit of $3.1 million last year compared to a loss of $55 million during the pandemic. Engineering and services giant Downer EDI share price fell more than 5% after a big fall in its profit. Bapcor, which owns retail brands including Autobarn and Burson, said profit was up 6%. What was interesting, trading since June has been mixed, but there are some good signs in that, and its share price jumped nearly 2%. Another in that consumer space was Super Retail. It reported it owns Rebel, BCF, Supercheap Auto, among others. Its bottom line fell 20% due to lockdowns, but sales since June 30 have held up really well, and its share price jumped nearly 5% yesterday. And fund manager Magellan reported a 3% fall in adjusted net profits. Been very high profile, that one, for the last 12 months. New boss David George said he was determined to turn around the fortunes of the struggling business.
And just a quick wrap on how the property companies are going.
Plenty of those coming out at the moment. A couple of interesting ones. Property giant Dexus said its net profit was up more than 40% for the full financial year. That triggered a 2% rise in its share price. But even more impressive, at least in terms of turnarounds, was Vicinity Centres, which owns all the Westfield shopping centres in Australia. It went from a $258 million loss in the 2021 financial year to a $1.2 billion profit.
Wow.
And what I liked about that, the chief executive, Grant Kelly, in a very monotone style, said last financial year was one of recovery and progress. Sure was.
Yeah, you can say that again. Wow, that's not too bad at all.
Great turnaround.
Now, moving on to overseas news, Sean, and the man who created WeWork, Adam Newman, is back raising money to try and reinvent renting this time.
Cracking story. Mr. Newman is a genius or a dolt, depending on who you're talking to. He did create WeWork, and at one time it was valued at $47 billion. He eventually left the business in 2019, and now in 2022, it's worth about $4 billion WeWork. Mr. Newman is now starting a company called Flow, focused on the residential property market. He's bought up about 3,000 apartment units in Miami, Fort Lauderdale, Atlanta, and Nashville, and he wants to create a branded product across all those territories with consistent services and community features. So you would rent a branded housing product. He also wants to team up with other landlords and basically brand their communities. What an interesting concept.
Yeah, it is. Walmart, which is, of course, the retail giant in the US, has provided surprisingly upbeat sales and profit figures for the last quarter, helping sentiment among investors.
Yes, it's a bellwether for the economy because it's so big and many people who shop there are from lower socioeconomic groups. Yesterday said its future drop in earnings won't be as steep as expected. It has had to discount stock, a lot of electronics in that. It's had to pay higher wages, but sales are up. It added that there has been a shift down the value curve. The example given, Michael, was people are buying less deli meats, more canned tuna and hot dogs.
All right, Sean, finally, here it is, the story that I know I've been waiting for. The Tasmanian tiger could be reintroduced into the wild within a decade after a US biotechnology company said it could recreate the animal.
Yes. Now, the Tasmanian tiger was declared extinct nearly 90 years ago after the last known tiger died in a Hobart zoo in the mid-1930s. The carnivorous marsupial was wiped out basically by farmers and the government, who offered money for people to bring hides in. Now, of course, we have had a few unconfirmed sightings over the years, but that's really about it. Colossal Biosciences, which is a Dallas-based biotech company, has been working with the Uni of Melbourne to recreate the genome of the thylacine, which is actually the tiger's proper name. They've also been working on a woolly mammoth. The upshot of all this is that they reckon in the next few years, they'll actually be able to revive or de-extinct, I'm not sure how would we put this, the Tasmanian tiger. There you go.
6 Jurassic Park movies. I just checked.
Right.
6 warnings to society about what happens if you bring back extinct creatures. It's a Tasmanian tiger today, a T-Rex tomorrow. Consider this a warning. All right, up next is the Fear and Greed Daily Interview. And we mentioned this at the top of the show. You're speaking to Chris Breike from StockSpot.
Yep, all about superannuation and how you should think about superannuation, the types of investing you can do within your super fund.
Yeah, he's a really good communicator, Chris. That one's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 18th of August, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.